We spoke about Liqwid Finance 2 months ago when it was just 10 ADA per token. Now it is worth around 90 ADA per token, and this is just the beginning. We will go more into Tokenomics later, but if you bought at those low levels when we covered it, congratulations. Liqwid Finance, in my opinion, is one of the best Cardano projects that you should be aware of. Just like Ethereum, now on Cardano, after its smart contract upgrade last September, a lot of decentralized apps are launching on Cardano, and one of them is Liqwid. The ecosystem is slowly developing, and there is always opportunity in the market to make good investments. Liqwid Finance is an open-source algorithmic and non-custodial interest rate protocol built for lenders, borrowers, and developers. To make it more simple before blockchain technology, we had banks and certain contracts that if you would leave your funds locked with them, you would get a very low interest reward of 1%. Now with blockchain, we don't need the third party, which is the bank. We can do that in a decentralized manner, offering lower interest for borrowers and give most of the interest rewards to the lenders. Liqwid Finance is a decentralized finance platform that works like a bank where people will be able to lend, borrow or leave money there and earn percentage interest rewards. Liqwid Finance was initially ideated in 2020 when they wanted to build the protocol on Ethereum, but the network had issues that would not benefit their main goals. The founders, Duane Cameron and Florian Völleri, then decided to move on Cardano blockchain. Here, they had the funds provided by Catalyst Project from Cardano's reserve fund, voted by the Cardano community. Liqwid Finance has been built for developers because they will be able to connect other decentralized app balance directly to a liquid market to earn interests. Before we continue, I just want to clarify something that you might have forgotten. We only do educational entertainment, and my job here, it is not to be your financial advisor. So please do your own researches before investing. The Liqwid team is composed of traditional finance industry veterans, DeFi power users, and Haskell developers. In the past months, they announced many new developers onboardings. Looks like they really understand the market and they know where they are going and what they want to implement. You can follow them on Twitter to get to know on time, all the news directly, and the exact launch date, which they will probably announce soon. They also opened a new Spanish Twitter account for the Spanish community. Their Twitter account is growing significantly. In fact, they reached 50,000 followers in January, and now they are close to 60,000 followers, which are keeping an eye on the project. In the last 3 months, they have announced many new partnerships. One of the most important is with SundaeSwap, which is so far the biggest decentralized exchange on Cardano, after their launch last month. They then partnered with MetAtoms, which is the first play-to-stake metaverse on Cardano, and with Cody Network, builders of JED, which is an ADA-powered algorithmic stablecoin protocol. Liqwid Finance will support JED as collateral type on the platform at launch. This will boost liquidity and will allow users to mint stablecoin loans. Lastly, they have partnered with a DAO to work together with their developers and build Agora, an open-source governance module built not only for Liqwid Finance but made available for any Cardano projects. All these partnerships will increase the exposure of the project, and it will bring many more investors on board. If we now look into the roadmap, it is very important to keep in mind that Cardano's community voted to give funds to this project to be built, so it is very supported and the people will buy these tokens. We can see here that they had a private test net in Q3 2021, and they are going to launch the main net in Q2 2022. They had in fact announced that in April a public test net will launch, and obviously shortly after that also the main net will launch. This shows that they are committed to their roadmap, and they are on time as planned. They are also on time with Q1 2022. They are building the decentralized autonomous organizations and doing security audits. When they will launch in the coming weeks or months, I believe they will have huge adoption of the platform. We have seen the total value locked on Cardano continuously breaking all-time highs, and Liqwid protocol will play a major role because it is one of the most supported projects on Cardano, which will increase the ADA and Liqwid tokens demand. If we now go into tokenomics, there are 21 million token maximum supply, and at the moment, it has just under 40 million market capitalization, which in my opinion is extremely low. There is no initial stake offering, no pre-sale, no VC funding, just a fair launch. The only way to earn Liqwid tokens is by buying it, using the protocol, or receiving grant funds from the decentralized autonomous organization Treasury, only from day one on launch day. The Liqwid token generation event occurred in the first block of multi-asset support on Cardano using a time-lock minting policy. LQ is a governance token, and so the holders are able to vote on the future on the project. At the moment, you could take part of this with their Discord. After that, you will be able to vote through AgoraDAO. At the moment, there are just 365,000 Liqwid in circulation, and if you want to buy it, you can trade it through Sunday Swap and Muesli Swap decentralized exchanges. Liqwid Finance, it is not yet on CoinMarketCap and CoinGecko, but it is on preview only, so I would guess that it will soon be integrated, probably when they will launch. As we can see, the supply will be slowly released over 2 to 3 years, and it is distributed this way. 25% will go to the team, 60% will be distributed to the community, 10% for yield farming, and 5% for the decentralized autonomous organization. Basically, 7 to 5% will be slowly distributed to the community who provides liquidity to the protocol, and 25% for the team, slowly released, which is positive for price stability and growth. Here we can see how exactly you earn rewards on the platform. When you provide any sort of liquidity to the platform, you get Q tokens. Example, you provide 10 Sunday Swap token, you get 10 Q Sunday Swap. First, you can basically earn Liqwid tokens if you stake these Q tokens. You can also lend or borrow on the protocol as mentioned before. If you provide ADA, you will be able to 5x your yields rewards. First is, by staking ADA, you will get 5% more ADA yearly. Second is, when you supply ADA, you will get Q ADA, which increases its value on an interest yield calculated yearly on the borrow interest. This phase is called a quifier, and you can read in more details on the white paper. Third phase is the hydroponica, and you basically earn Liqwid tokens if you stake these Q ADA. Fourth reward comes if you stake these earned Liqwid tokens into the safety pool. You will earn a % from the borrower interest repaid. Lastly, you will earn liquidation interests in ADA on Liqwid tokens. This picture is also very clear thanks to CAS pools. If we now compare Liqwid Finance to Compound Protocol, which has a $1 billion market capitalization, and Aave has a $3 billion market cap, we can clearly see what potential this project has. Liqwid at the moment, before launch, has only around 40 million market capitalization. So, if it would have to reach Compound and Aave level, the token would go 30 to 100 times its current value. We believe it will have a huge growth considering is launching soon, and it is the most supported DeFi protocol in the Cardano ecosystem, and probably a lot of ADA holders will use the platform or buy Liqwid tokens, which will exponentially drive the price higher. We are going to use the platform, and we will update you on how good the rewards are, so make sure to subscribe to don't miss this update. Let us know in the comments below if you hold any Liqwid tokens already, and if you think it has good potential or not.